The Bitcoin halving is finally here. It is April 2024 and it is in full effect. What's going on, everybody? It is your boy Skag, and in this video, we're going to be discussing the Bitcoin halving. Obviously, what I like to call the world's greatest event in finance. I love this event. It is absolutely one of my favorite things ever since finding out about it back in 2016. Absolutely one of my favorites. And I'm super excited to share with you guys just some information, some knowledge, some wisdom about it that I've gathered over the years. And one of the reasons why I still stay so confident in Bitcoin from a long-term macro perspective. So let's really quick discuss some of the things we're going to talk about in this video. This video is not going to be a Bitcoin basics video. If you need a little bit better of an understanding of Bitcoin, I do advise starting somewhere else. But specifically for the halving, I think this will be one of the better videos that you have ever seen on it. And you guys can let me know in the comments whether or not that is actually true. So let's discuss. First things first, we'll discuss the basics, right? What is the halving as it pertains to Bitcoin? What is the impact that has on people like you and me, and as well as some of the other people that participate in the network? All about its inflation rate, or more specifically, its deflationary rate. And then we'll get into some supply and demand stuff, which is probably some of my more favorite topics to talk about when it comes to the halving, but we'll save that for the end. So without any further ado, let's jump right into this. Okay, so what exactly is the Bitcoin halving? Right, well, the Bitcoin halving is a reduction in the block rewards. Right, the Bitcoin halving is a pre-programmed event that occurs approximately every 4 years, where the block reward given to Bitcoin miners is cut in half. So to understand how the halving works, first let's really quickly discuss block rewards and how those work. Right, so in a blockchain, when transactions are put into blocks, they are verified by miners. And miners, for verifying these transactions and putting in the effort to solve blocks, are rewarded in Bitcoin. It's actually the first transaction that is put inside of any block is the miners paying themselves. And for the past 4 years, they've been paying themselves this handsome fee of 6.25 Bitcoin. And in every single block, we would generate a brand new 6.25 Bitcoin, and that would get rewarded to the miners who helped mint that block out. Now, moving forward with the Bitcoin halving, which is a regular occurrence, which is hard-coded right into the Bitcoin software, which ensures basically a predictable and transparent supply schedule, we can actually see that the new rate is 3.125 Bitcoin, right? The same as it was before, literally cut in half. So this happens again every 4 years, every 210,000 blocks. These guys are getting their rewards cut in half. Right? This fixed schedule does contribute to things like Bitcoin's scarcity and the deflationary nature of it, which we're going to get into in a second. As the rate of which new Bitcoins enter circulation does gradually decrease over time. To put this into a little bit of perspective, miners will receive half the amounts that they currently receive for each block they mine. This reduction in block reward does have significant implications for those who are producing it, and a few implications to people that are holding it, as we will further discuss in this video. Now, let's jump into some of the impact, right? So the impact on people like us, right? On people that hold it, right? Anybody who owns Bitcoin, that has it sitting on an exchange, sitting on a wallet. The halving only influences the rate at which new Bitcoins are created and distributed to miners as block rewards. It does not actually alter or modify any existing Bitcoins that have already been mined and are in circulation. The reason I put this in here is because a lot of people look at the halving and they have this weird misconception that their holdings are going to get cut in half. And that's just not true. It has not that effect on price, doesn't have that effect on your holdings. This means that if you own 1 Bitcoin before the halving, you will still own 1 Bitcoin after the halving. Now, the value of your holdings may fluctuate, of course, due to market conditions, but the halving itself does not actually change the amount you possess. And you'd be surprised how many people actually have this misconception about Bitcoin itself. So have no fear. Anything you buy pre-halving or had pre-halving, now post-halving, should be exactly the same. But what about those miners, right? What about those producers that we talked about before? Well, they're going to have a little bit more of an impact. As we kind of discussed before, they will see a little bit of a revenue reduction, right? Block reward halving leads to a 50% decrease in mining revenue, right? For people that were earning 6.25 Bitcoin per block the past 4 years, I've now got that cut in half. They're only getting 3.125, right? A literal 50% decrease in the new production. This also affects Bitcoin miners in their revenue reduction as well as their break-even price, right? If you take a hit on your revenue because of the value of the thing that you're producing, that means the break-even price that the asset needs to be has to be higher, right? So we'll get into this a little bit more on the next slide, but this is actually one of the most important things that I think people need to consider, is that the break-even price for the people producing Bitcoin has went up. Now, because of this, there is actually a third impact to Bitcoin miners, and that is potential miner capitulation. The reduced block rewards post-halving can put significant pressure on these miners. Again, if their break-even price, if their operating costs go up, or if they're not making enough to meet their current operation costs, those operations may end up ceasing to exist. They may be sold off, they may merge with other miners, they may currently pause, right? They might just halt production at that time. They might just stop mining until they get back towards that break-even price. They have a few different options, but after the halving, you sometimes can see mining operations that have high costs and can no longer sustain themselves may fall out. But what I really want to talk about out of all of these three, because all three are important, right? The revenue reduction, the break-even pricing, the miner capitulation, right? With some miners falling off because they can no longer afford it. All of this stuff is significant, but the break-even price is the one that I like to focus on, right? Because the break-even price gives us a general idea of what these miners will need to, at some point in the future, demand in order to stay afloat, really. Again, if you're earning a certain amount of money and then your revenue gets cut in half and you can no longer afford to keep the lights on, that's a big deal, right? And we need to know what those potential operating costs are. So let's discuss into some of that, right? So pre-2024, the average break-even price, and again, depending on what point in the year, you will obviously see higher and lower break-even prices. For each mining operation, this is going to be different. So you might get different numbers depending on, what country people are mining in, how much they're paying for electricity, what their cost for just the, the space may be. A lot of factors in here. So this is kind of an average price, but you could have mining operations with break-even pricing of 30,000. Some of them could have been upwards of 40. Right? We've got to understand there's a little bit of fluctuation here. But pre-2024 halving, about $38,000 is the break-even price. And if you look back on your charts, or if you know your Bitcoin pricing history, you may know that for a bulk of 2024, we were, below this price range. We spent a lot of time as low as 16K, right, all the way through the 20K range. Right? We only pretty recently actually got above this price level in the grander scheme of the past, 4 years. So we haven't spent too much time above this level. Now, just because we are currently trading below that level doesn't really mean that, again, every miner is just going to give up and quit. Some miners have the equity, they have the income, they have the funding to sit there and mine while pricing is below their break-even price, and they will look to either hold on to that or sell a portion off and hold some and, try to work out their business the best way that they can as per their operating costs. But this has been about the average price. Now, after the halving, because we are post-halving now in 2024, this break-even price has changed, right? Because again, if they're breaking even with Bitcoin around the 38K, but now they're making, half of that, their break-even price for that same reward is going to be higher. So post-2024, the estimations are somewhere around the $75,000 range. Of course, right now we don't have hard set numbers on this. The last that I checked, the current known break-even price, or average break-even price anyway, was about $66,000, which coincidentally is pretty much the price of Bitcoin right now. So Bitcoin is pretty much trading at its current break-even price. We will start to see some numbers in the future. Maybe this goes up a little bit more. It should probably creep up into the $70,000, $75,000 range. And why is this important to know? Well, again, if we know that the operation cost for Bitcoin is set at a certain price range, then we, as people that are speculating and investing and kind of just in that field of, owning it, we can get an idea of where discounts may arise. Again, if Bitcoin is trading below the break-even price, we can look at that as a potentially really good price for us because we're getting it at a price that costs less than it would to actually produce it, which is a wonderful thing. And we can also know if price is getting a little bit crazy and trading outside of this, right? Say if Bitcoin were to shoot up to $200,000 or $250,000, and the production price is still only $74,000, we know that it's at that point trading at a pretty extreme premium. And you can make some assumptions off of that. That doesn't necessarily mean it will come right back down to production costs, right? Miners, at the end of the day, are trying to turn a profit and actually make money. So we can't assume that price will always sit here, but we can use it as an opportunity to say, hey, stuff is at a discount or potentially even at the break-even price, which is, in my opinion, a fantastic place to be acquiring and accumulating Bitcoin. So that is one thing we want to keep a look at for sure. All right, moving on. Inflation, or actually deflation. Let's take a look. So the Bitcoin halving obviously has a direct impact on the cryptocurrency's inflation rate, right? Because every time it halves, you are basically impacting the production of new coins, obviously, as we discussed. And that comes down to the inflation rate, right? How much new Bitcoin is being produced on any given year. And of course, by this inflation, we mean deflation, because with each halving, that inflation rate also gets cut in half, right? I call this pre-programmed monetary policy, right? If you know anything about fiat currency, right, you would probably have seen it very recently over the past couple of years that inflation in not only the United States, but all over the world has been going kind of crazy, sitting at levels between 3, 4, 5, 6, sometimes even 7% in some areas still, right? That is something then that is dictated by how much money printing is happening, what is happening with interest rates, and how the flow of money is all being handled. And those decisions are typically being handled by people in power, right? Like the Federal Reserve. They are setting interest rates. People in Congress are dictating policy which may or may not bring more monetary supply into the markets. These are all things that are decided ultimately by people. Whereas here, this is pre-programmed monetary policy. We know the inflationary rate of Bitcoin at any given moment, whether it was in the past, whether it is now, or whether it is in the future. Right? We know that every 4 years, this is going to get cut in half, which is a fantastic thing to know. The reason I bring this up, though, is because Bitcoin's inflationary rate, which you can see we are now just sitting below the 1% rate there, where I have circled, now sitting at, I believe it's 0.8, 0.9%. Right, sitting just below 1%, it's a pretty pivotal thing. And the reason I say that is because Bitcoin is quite often compared to other things. And specifically, it is quite often compared to gold, which we now have a lower inflation rate than. Fiat, again, not even really in the discussion. I could put the fiat inflation rates here, which are changing, more and more each day, sometimes getting better, sometimes getting worse. But fiat, what we mean by that is US dollars, euros, pounds, are all sitting at high 3%, 4%, 5%, right? So much higher than what we're talking about here between gold. Now, again, gold, often considered a traditional store of value, does have an annual inflation rate between 1.5 and 2%, depending on the source you're coming from. This means, again, that the supply of gold increases by around 1.5 to 2% each year through its own mining activities. With the halving now in effect for 2024, Bitcoin has and will more than likely always remain to have a lower inflation rate than gold. Now, this doesn't mean gold couldn't dip below a 1% inflation rate, but again, that is not necessarily up to, in Bitcoin's case, it's up to code. In gold's case, it's up to organizations, people, right? Is it a decision that can be made, right? Just like it can go down to 1%, it can also be increased to 3%. They can just continue to mine for gold more aggressively than they have in the past. But because we know Bitcoin's inflation rate is, again, pre-programmed, even if gold's were to slip down to below 1%, it's unlikely that it will continue to cut in half every 4 years, much like Bitcoin. So this future projection I have for gold's inflation rate is just assuming that it's going to keep stagnant with what it has been. But for me, this is a very pivotal moment. And you can see we were pretty much matching with gold's inflationary rate after the last halving. So we kind of matched it. Now we're below it. If we keep comparing Bitcoin to gold as this traditional store of value, and newer generations keep seeing it that way, and people keep holding on to it as that long-term store of value, this has to be one of the contributing factors. People often bring up the conversation of, should I buy Bitcoin? Should I buy gold? You see a lot of conversation online about it. We know Peter Schiff is very much against Bitcoin, very much for gold. Again, I don't know how you can come to that conclusion when you have data like this that suggests, Bitcoin should be the better store of value over time. I firmly believe that it will be. I use things like should be because, again, the future is the future. We don't truly know, but I highly suspect that, again, this will remain as it has been for the past couple years, where more people are funneling into Bitcoin as a store of value. We see things like ETFs that are out there now. And the fact that Bitcoin has these crazy low inflationary rates inside of an environment where fiat currency is holding high interest rates and inflation is a big core of the conversation everywhere, this is by far now one of the things that is heavily impacting me on staying bullish on my Bitcoin bags. So hopefully this helps you guys out a little bit in terms of inflation rate. Again, surpassing gold, I do personally think is a big deal. I would like to hear other people's opinions on this, so feel free to throw that down in the comment section below. Whether or not you guys are more bullish on Bitcoin, or if you are a firm or larger believer in assets like gold. By all means, 1.5 to 2% inflation is great, but 0.8 going down to 0.4, and then from 0.4 going down to 0.2, for me, is the obvious macro play. So with that, let's talk a little bit about supply and demand, right? Let's real quick, turn on our imagination. Although this is a hypothetical scenario, there is a little bit of truth to this stuff, so let's definitely turn on our imagination caps here. So let's suppose that before the halving, and these are the accurate numbers, by the way, that the market was filling a demand for 900 Bitcoin per day at a price of about $60,000 per Bitcoin, right? That means every day 900 new Bitcoin are coming in. This is exactly how many were coming in per day pre-2024 halving. This means that buyers were willing to purchase, again, 900 Bitcoin daily at that price point. And the market was able to supply that, right? They had 900 new coming in every single day. it was $60,000 per piece, and the market had no problem with that. I was able to supply that out. People were able to buy it. Everything was great. Everything is just being held. Now we imagine that after the halving, right, the daily supply of new mined Bitcoins is going to be reduced from that 900 down to 450. But if the demand the previous day for 900 remains the same, then technically there would be a shortfall about 450 Bitcoin per day. For the same people every day going in to buy it, or again, collectively, everybody meeting that same demand, you're going to be at a shortfall about 450. And this scarcity could lead to increased competition among those buyers, right? Because all those people that were happily buying up the 900, you're now competing for less. And the only way to compete for less is to outbid, right? To bid a little bit higher than somebody that's also bidding. So again, the scarcity could lead to increased competition among those buyers, potentially driving up the Bitcoin price as they bid higher to, again, secure that newly restricted available supply. Again, in this scenario, if the demand persists at 900 Bitcoin per day and the market price rises to, say, $80,000 per Bitcoin, the market could and probably would reach a new equilibrium at some point. At this higher price point, again, some buyers may be priced out, while other buyers may be enticed to actually exit the market and sell some of their existing holdings, effectively bringing that supply and demand balance back into existence. Again, though, please note, in this hypothetical situation, this assumes that nobody is selling outside of those 900 Bitcoin, and the demand is staying the same and not really rising or anything like that. So on any given day, supply and demand will be a little wonky. You're not always going to see straight up markets. That's not what I'm trying to employ onto you. What I'm trying to employ onto you is that demand only needs to stay relatively the same in order to drive prices higher, right? With less available supply and the same demand, that still results in higher pricing. And that's what I love about this. It doesn't require new people. It doesn't require us to go out and convince more people to do it. It's just the same people feeding the same demand against more restricted, consistent supply allows us to consistently bid higher over time. Now, as price goes up, that does make headlines and entice people and bring stuff like that into the mix. And that is where you start to get fear of missing out and hype and all that other fun stuff that plays into effect. And to show you that, let's take a look at some historical proof. All right, let's take a look at the stock to flow model, aka my favorite Bitcoin chart ever. Right, so the stock to flow model here suggests that as the flow of new Bitcoins decreases with each halving, that the stock to flow ratio increases, indicating growing scarcity. According to the model, a higher stock to flow ratio has historically been associated with higher Bitcoin prices. And now let's take a look at this awesome chart on the right side. Now, again, this is one of my absolute favorite charts ever. This really shows the impact that the cutting of production or the cutting of the supply, the halving, really has on the Bitcoin price. Now, if this is your first time ever seeing this, I will briefly explain it. On the left-hand side on the graph, we do have the price of Bitcoin. On the bottom axis, we do have the years going by 2 years at a time. And then on the right side, we have our key, which is showing us that the colors you see that are overlaid of the Bitcoin price history there have to do with how close or far away we are from the halving. So we could see that the red means we're about 1,400 days away, orange 1,200, yellow 1,000, so on and so forth, all the way down till we get to the blue, which will start being about 200, and then the dark blue, which is essentially right at the halving. And then when it switches back to red, that means we're now, again, the farthest away, meaning that it had just occurred. So if we take a look at this, we can see that anywhere that price is at where it's blue is right before the halving, right? And anytime red and orange is immediately right after. So if we kind of take a look at this, again, we can see here where it's blue, right before the production cut, what prices was kind of doing, just sitting here in a range. Production cut comes in, that supply gets cut in half, the new supply gets cut in half, the demand for Bitcoin remains the same, price starts to move up a little bit, and as that happens, there becomes more hype, more excitement, more people buying into it, right, that euphoria, and all of that continues to push off until people kind of, again, it starts to get overpriced and you start to trade on those premiums and it starts to come back as, the halving starts to have less and less effect as that demand and supply equilibrium comes into effect. Again, we can see the second halving here where it kicks in again with the blue into the red. We can see what happens to price. Price starts to go up, all that hype starts to kick in. All right, we can see it again in late 2020. Or the halving kicks in, switches to red, price moves up, and then we hit that equilibrium and we center out. So again, you guys are all free to make your own decisions and conclusions, but we have once again just went from blue to red, which means that I will expect, again, because of that cut in production, right, that reduction in incoming supply, that new lower inflationary rate, that as demand stays consistent like it has, we should see another move up into some hype, some fear of missing out, and then once again level off and repeat the same cycle as time moves on. So that is the stock to flow model, one of my favorite models, as well as some great information on the inflationary or perhaps the deflationary rate of Bitcoin, the impact that it does to miners and how those break-even prices matter for us speculators, and so much more. Hopefully you guys found this video useful, knowledgeable. Let me know what your guys' favorite thing is, if you learned anything, and let me know if you agree or disagree. That being said, family, this is your boy Skag, and if you want to get more just like this, head on over to buyskag.com. Sign up for that newsletter. We have beautiful tips, tricks, value, as well as some exclusive communities you guys can join to continue to grow and develop in your digital income lifestyle. That being said, family, love and appreciate y'all. Thank you for tuning in. Give me a like, give me a subscribe if you guys enjoyed it, and I will see you guys in the next one.